Welcome back to Investing Talk podcast. Today, we are tackling one of the really volatile names out there in advanced energy, Oklo. And the big question when everyone seems to be asking is, well, is Oklo a good time to buy right now? You've probably seen this stock. I mean, astronomical growth. We're talking hundreds of percent up really fast. But when we actually cut through all that market noise, the financial fundamentals, well, they tell a very different story. Almost completely disconnected from the price right now. So we've pulled together the latest analyses, the technical charts, risk factors, everything we could find to give you a clearer picture on this, let's call it highly speculative stock. And hey, if you find this analysis helpful, please remember to subscribe, like the video, leave a comment. Also, if there's a specific company you want us to look into next time, definitely let us know in the comments below. Okay, so our mission today is really to unpack all the data we have. We want to separate the revolutionary tech potential from the actual financial reality on the ground today.
Hopefully that gives you a clear understanding of what's driving this, frankly, wild valuation.
Okay, let's get into it. And we really have to start with the fundamentals, the core financial position, which, for a stock moving like this, it's often the painful part to look at. So first thing, Oklo currently reports zero recurring revenue.
Zero. Like literally nothing coming in regularly.
That's right. Quarterly annual revenues listed as $0, period.
Okay. And what does that mean then for their cash flow situation? Are they just burning money?
Exactly. It means they're funding everything, all the R&D, the development, the push to get commercial by, well, burning through capital continuously. Their net income, looking at trailing 12 months, it's negative, around minus $56.8 million.
Wow.
Yeah, and that translates to an earnings per share, EPS, about minus 45 cents. It just shows significant ongoing operational costs without income to offset it.
And when you talk about burning capital, do the forecasts you looked at show this slowing down anytime soon, or is the hole getting deeper?
Based on current analyst consensus, it's deepening, yeah. The most recent quarter, Q2 2025, that showed negative earnings of minus 18 cents per share. And analysts, they expect the next quarter to stay negative, maybe around minus 12 cents. The projections show these losses continuing well into 2026.
So zero revenue now, projected losses for at least another year or two.
That's the picture. Financial visibility is, frankly, extremely low. Most external estimates still have zero revenue penciled in for the next couple of years.
Okay, that immediately just screams high financial risk, doesn't it?
It absolutely does. And another layer here, because they only recently went public through that de-SPAC deal.
Right, this can be complicated.
They can. And finding clear, verifiable balance sheet details in recent public filings, like a standard 10-K post-merger, isn't straightforward yet. It adds complexity if you're doing due diligence. But what we do know is net cash flow is negative. They're completely reliant on getting external funding to keep the lights on and the research going.
Reliant on external funding.
And this is critical. We have to highlight this warning. The company itself, in prior risk statements, has actually warned of, and this is the standard language but still important, substantial doubt about ability to continue as a going concern.
Okay, wait. That going concern language, you hear that sometimes with early stage companies, right? Is it just standard boilerplate, or should we take it more seriously here, especially given the, huge market cap it has right now?
That's a fair question. It is often standard language for pre-revenue firms. But in Oklo's case, I think it really underscores their high dependency on either continuous capital raises or, landing a major contract very soon. Given the negative cash flow and just how expensive advanced nuclear development is, it's a necessary flag. It reminds investors they're betting heavily on execution and, crucially, continued access to capital, not on existing sales.
Right. So a high-tech dream, potentially revolutionary, but paired with a balance sheet nightmare currently. Okay, let's pivot then, because the obvious question is, why? Why is money, presumably sophisticated money, pouring into this zero revenue situation? This has to be the bull case, right? The reason for the hype, what was it, 700% year-over-year growth in market cap?
That paradox, that disconnect, that is the entire story with Oklo right now.
Absolutely. So Oklo's space is advanced nuclear. They specialize in these small modular reactors, SMRs, and also nuclear fuel recycling. That alone is pretty future forward, but I think their differentiation is what's really sparking the excitement. Analysts, you mentioned Bank of America, they're pointing to Oklo's target market, this huge, almost unquenchable demand from high-density data centers.
Right, the AI connection.
Exactly. They're trying to position themselves to supply clean, reliable, distributed energy specifically for the AI sector's growth. And that's seen as this potential technological moat, you know? The need for zero-carbon, dependable power for AI is just exploding, and Oklo says, we have a solution.
And is this potential backed by anything tangible yet? Any deals? Partnerships?
Well, there's some momentum. They've signed a Memorandum of Understanding, an MOU, with ABB. That's for deployment support, kind of setting the stage for potentially rolling out their Aurora powerhouses globally. So investor enthusiasm around that, plus any hint of regulatory progress, it's been explosive. That's what's fueled that massive market cap jump based almost entirely on potential, not profit.
And it's just fascinating how that enthusiasm has completely unmoored the stock price from those grim fundamentals we started with.
Which brings us to the technical side. Because looking at the charts, the numbers here are, well, alarming might be the right word.
Alarming how? Just the speed of the ride.
The speed and how far it's run. The stock surged over 265% year to date, recently hit a high of, $136.53. This isn't steady growth. This is price action, like a rocket launch.
So how do the technical indicators look? Do they reflect that kind of speed? Is the market just running way ahead of itself here? It's not just running. It feels like it's sprinting flat out. I mean, look at the moving averages. The 50-day simple moving average is way down at $75.28. The 200-day is even lower, around $44.98.
So the current price is nowhere near those historical support levels.
Not even close.
Yeah.
It's trading on pure, unadulterated momentum right now, sentiment-driven. And maybe even more telling is the RSI, the Relative Strength Index.
Ah, the overbought, oversold indicator.
Exactly. The 14-day RSI is currently clocking in at 86.34.
86. Wow. Isn't anything over 70 considered overbought?
Extremely overbought, yes. So 86 is way up there. Right. It signals that the risk of a material technical correction is highly elevated, and the volatility confirms this picture. It was cited recently at a very high 15.62% per session. That's huge movement.
Okay, this might be the most critical piece of data you found then. The analyst disconnect. You said the consensus analyst rating is actually a buy.
Correct. The consensus is buy.
But their median one-year price target is only, 75 to 92 tool, somewhere in that range.
That's right. Median targets range from about $75.92 up to maybe 92 tools.
So analysts are saying buy, but their actual price targets are like 30%, 40%, maybe even more below where the stock is trading right now. What does that huge gap tell us about how professionals are valuing this?
It tells us the current valuation is seen as highly speculative, not fundamentally supported. Most professional models, the ones driving those targets, they anticipate a significant pullback. Why? Because the current price seems to already factor in years of successful execution, getting regulatory approval, signing major customer contracts, things that simply haven't happened yet.
So the street basically thinks the current price is overheated. Got it.
That's the strong signal from the target prices, yes, overheated.
All right, moving forward then, let's talk catalysts. What could drive the stock in the near term, up or down? What should people be watching over, say, the next 3 months?
Well, first up, we've got the Q3 earnings release that's targeted for October 15th, 2025. Now, obviously, investors won't expect revenue there, but you can bet they'll be scrutinizing that cash burn rate very, very closely. And any updates on capital reserves?
Absolutely. Cash position will be key. Then, looking into November, keep an eye out for targeted ETF rebalancing. If Oklo gets included, or maybe even excluded, from major clean energy or tech indices, that could definitely inject some short-term volatility. Passive fund flows matter.
Good point. Index inclusion can be a short-term mover.
And finally, around December, we should start seeing updated institutional holdings from 13 of filings. That'll give us a clearer picture of which big players, if any, are making substantial bets on Oklo.
And beyond those scheduled events, with a stock this volatile, rumors and speculation are huge drivers day to day.
What kind of rumors are swirling?
Well, the biggest speculation always revolves around potential customer announcements,
Yeah.
major data center deals. If Oklo were to announce a significant partnership with a leading AI or cloud company, someone desperate for that zero-carbon power, that would be huge.
Instant validation, almost.
It would definitely move the needle. There's also constant chatter about maybe expedited U.S. regulatory pathways for these advanced reactors. Any news suggesting their deployment timeline could speed up would boost sentiment dramatically.
Okay, but those are hopes, rumors, potential catalysts. We have to circle back to the concrete risks, the factors that could actually trigger that sharp pullback the technicals seem to be warning about.
Right. Beyond the obvious, they don't make any money yet, risk, there are three really critical execution risks. These have nothing to do with market sentiment, just the challenge ahead. First, simple execution risk. The technology sounds great, but it's commercially unproven at scale. They actually have to build these advanced plants, operate them reliably, hit cost targets. That's a huge hurdle.
So can they actually deliver on the promise?
That's risk number one. Number two, dilution risk. Given the negative cash flow, the sheer cost of R&D in building these things, if commercial revenues get delayed, even slightly,
They'll need more money.
they will certainly need more money, which likely means repeated equity raises, selling more stock. And that dilutes the value for current shareholders.
Okay, makes sense. And the third risk?
Third is regulatory risk. Progress on getting their combined license application approved by the NRC or equivalent bodies elsewhere, it's absolutely massive for sentiment and their timeline. Any significant delays there, or worse, a major regulatory setback, that would be incredibly costly, both in terms of capital needed and just market confidence evaporating.
Right. Execution, dilution, regulation, huge hurdles.
Okay, so let's try to tie this all together. What does this mean for someone considering buying Oklo right now? We've got this incredible momentum, truly disruptive tech, targeting a potentially explosive market that AI energy demand. But it's set against this backdrop of zero revenue, high losses continuing, and technical charts basically screaming overbought.
Yeah, the overall assessment really has to be one of extreme speculation at this price level. So if you're thinking about short-term trading, okay, the stock is high volatility, it's purely momentum-driven right now. It's only suitable for traders with a very high risk tolerance, people who understand and are prepared for the possibility of a sharp, sudden material pullback.
They're betting on news flow, basically. Essentially, yes. Betting on positive catalysts or continued hype over the next, say, 3 to 6 months. But for long-term investment. Based on fundamentals. The current valuation is just. It's extremely difficult to justify using any standard financial metric. It's really not suitable from that perspective until the company can actually demonstrate commercial traction, show some significant revenue visibility, and achieve greater financial transparency through regular filings.
Because the current price already assumes success.
We have to reiterate that. The market price today seems to already factor in years of successful, potentially flawless execution, which is a huge assumption. This massive disconnect between the price and the current business forces us to ask a pretty fundamental question about how we're valuing this thing.
Which is?
Are we valuing Oklo based on its current business model, which again generates zero revenue? Or are we valuing it purely based on a future estimated massive need for power from the global AI infrastructure? Because the answer to that question really dictates whether buying Oklo today is truly an investment, or if it's fundamentally a gamble on that future coming true, exactly as the bulls hope.